Hey there, welcome back. In today's video, we're going to be covering financial technology, otherwise known as FinTech. So let's get started. So financial technology, or FinTech shortened together, is the use of technology in order to innovate financial services. Surprise, surprise, FinTech actually encompasses a lot of different services and things that use automation, efficiency things, AI, etc. And so we're going to be covering it. Now, first off, I just want to state that this is not an exhaustive list, okay? This is just a couple of categories and a couple of examples of companies that are in that space. If I were to list all of them, it would be insane. And also, as with all technology companies out there, sometimes they don't make it. And so at the time of the video, these ones that I'm mentioning are still in existence, but there are a plethora of ones that unfortunately didn't make it, and there are some that are on the chopping block as of now. So yeah, digital payments and transfers. So this is what you want to think when it comes to the terms of digital wallets or user-to-user payment processors. So you could think like PayPal, Venmo, Square. Those are some examples of payment processors that actually are considered part of FinTech. Online lending and crowdfunding. So this is a way for people to get money from their peers and other small, maybe not local to them, investors. And really, it's kind of cool to have a way to crowdfund certain projects, businesses, or even to cover medical needs. So some examples of this include Prosper, Kickstarter, GoFundMe, and Lending Club. Robo-advisors. So this is the use of either really cool online platforms to make investing a little bit more user-friendly, or it could be involving use of AI and algorithms in order to help manage someone's portfolio. So some examples of this are Robinhood, Betterment, and Wealthfront. InsurTech. I don't know why we have a habit of combining two words together into one word, but insurance technology. And this includes different online insurance companies that use different algorithms in order to find and create more customizable insurance products. Just to note that this category includes all different types of insurance, rental, homeowners, cars, and even health. So some examples of this are Metromile, Oscar Health, and Lemonade. Blockchain technology. So think identity verification, ledgers keeping, security online ledgers, and general record keeping. So some examples of this would be Coinbase or Ripple. Personal finance apps. So these are apps or digital tools that help people forecast their expenditures either by categorizing and helping them budget or showing them forecasts and projections. Some examples of this would be Mint, Acorns, or You Need a Budget. Now, aside from this, you also have FinTech doing some cool things with banking, which is why this is a separate video from the online banks. Interested in that video? Click there. But in general, there are some financial tech companies that are partnered with banks to do some cool things. Some examples of this would be Cube Money, Novo, and Chime. So let's talk about some pros and cons to FinTech in general. Increased access and convenience. So one of the perks of utilizing an online platform is the fact that it grants more accessibility for people, especially those in more rural areas for the United States. However, this is also a con in the sense that most of them require internet, and that might not be available to all American citizens. Enhanced efficiency and cost savings. So one of the benefits of using FinTech is that they have a large database of information in order to create these algorithms to be more efficient and therefore save costs. These solutions allow for eliminating certain processes that are no longer manual but automated, allows for efficiency in reducing paperwork, and potentially streamlines operations. So all of these have a roundabout way of lowering costs, and by lowering costs, it helps consumers then get a better product. Innovation and customization. So by utilizing all the data sets that they collect, they actually are able to provide a more personalized feeling because they are using data across a large subset of people who have similar factors and similar things such as you. So therefore they're better able to predict what predicaments they may be in contact with, as well as what are your usual habits, and therefore it seems more personalized. And the last pro is that it can be disruptive competition. So by having all of these FinTech companies out there changing how things are done, it challenges traditional ways and allows for people to see, and large corporations to see, what is actually effective and can actually widespread cause a chain of reactions for the betterment of the consumer. So that's pretty cool. Now let's talk about some of the cons. The first is security and privacy concern. Well, because all of our information is being utilized by these fintech companies, there are some concerns as to how much information they're collecting, how are they using that information, as well as how are they protecting that information. Because as we know, over the past couple of years, data hacking and other types of internet security fraud has been on the rise. So that's why it's crucial for these fintech companies to prioritize cybersecurity and to ensure that their data and whatever measures and methods that they use are encrypted to the best of their capability and meeting industry standards and surpassing industry standards in some cases. Regulatory challenges. So because fintech is changing the game and how things are done, there may be regulations and laws that have yet to catch up to them, or there may be a weird way of like having to sidestep because they do meet some qualifications for some things but not the qualifications for another, and because there's so many new ones, it's kind of hard to put them in a product and hold them to certain regulations. Digital divide. So as I was talking about with the first pro, the fact that so many of these services require the internet, it actually creates a divide in the sense that not every American citizen has access to the internet, and therefore they would not have access to these types of programs, apps, etc. Now, also aside from limited internet access, the fact that they are online devices or online products, there may just be an overall knowledge gap for some of our older community members in the sense that they may not be able to understand or know how to fully utilize a product that could be beneficial to them because either A, they have no idea about it, or they find it too confusing to use. The potential for financial instability. So one concern is the fact that so many fintech companies are out there and there's so many different integrations with different apps, different programs, different sectors, etc., is the fact that by being so interconnected, if one fails, it could actually disrupt a lot more. So you could think about like when Amazon's AWS is down or Google's clouds is down, or there's 504s, etc. going around, it could actually impact a lot of different businesses because everyone kind of relates to one another. And finally, the lack of human interaction. So one potential con to this is that some people just really like being face to face and talking to somebody, another human. And so that is a potential con because a lot of the ways and jobs that the fintech can take over could potentially mean a loss of jobs for people, but also can make it less convenient because they only have a computer or a program to contact and not a person to give a more human aspect to what they are having problems with. So yeah, this is just a very general video over the very basics of fintech, and as you can tell, it is a huge umbrella. So if there is a particular section of fintech that you want me to explore further, please leave a comment down below. Also, please just say hi. Do me a favor, give this video a like, subscribe if you aren't already, and share this video with somebody else. So until the next video, I'll see you. Bye.